everyone. So yeah, we're gonna continue reading our book, and today we're gonna read chapter 1, investment versus speculation. Result to be expected by intelligent investor. This chapter will outline the viewpoint that will set forth in this remainder of the book, and particularly we wish to develop at the outset comes concept of a priority portfolio policy for the individual non-professional investor. Investment versus speculation. What do we mean by investor? Throughout this book, the term will be used in connotation to spectacular as far back as 1934 in our textbook. Security analysis, we attempt precise formulation and the difference between the two. As follow: an investment operation in which, upon through analysis, provides safety of principal and induced return. Operation not wait. I need to see when. Oh my god. That is a lot. Ooh, I think so I want to have to say to you that I would only read 10 page a day. Yeah, it's only 10 page a day. I don't have a lot of time for that. I didn't say that I didn't have time to read books and I like that, but so to read all of this it would take like an hour or so, which is very long. So I would only read like about 10 page per day. Okay, let's read. Okay, while we have clung tentatively to this definition over the accusing 38 years, it is worthiness, nothing radical change, that have occurred in the use of the term investor during this period. After the great market decline of 1929 to 1932, all common stock were widely regarded as spectacular by nature. It's a leading author Ridley started flatly. The only bond could be bought for investment. Thus, we defend our definition against the charge that it gave too wide scope to concept of the investment. Now our concern is the opposite sort. We must prevent our reader from accepting the common jargon which apply the term investor to anybody and everybody in the stock market. In our last edition, we cite the following headline of a front page article of our leading financial journal in June 1962. Small investors bearish their selling odd lots short. In October 1970, oh my god. These quotations were illustrated by the confusion that has been dominated for many years in the use of the word investment and speculation. Think of our suggested definition of investment given above and compare it with the sale of a few shares of stock by an inexperienced member of the public who does not even own what he's selling and has some largely emotional conviction that he'll be able to buy them back at a much lower price. It is not irrational, then, to point that when the 1962 article appearance, the market had already experienced a decline of major size. I was now getting ready for an even greater upswing. It was about as time for a time as possible for selling short. In a more general sense, later used phrase reckless investor could be regarded as a laughable. Laughable contradiction in term, something like spread, shift, and miser, were this misuse of language not so mischievous. The newspaper employed the word investor in this instance because an easy language of Wall Street, everybody who buys seller security has become an investor, regardless of what he buy or for what purpose, at what price, or whether for cash or margin. Compare this with the attitude of the public toward common stock in 1948, when over 90% of those queried expressed themselves as opposed to the purpose of the common stock. About half gave us the reason not to save a gamble, and about half the reason not familiar with. It is indeed ironical, though not surprising, that common stock purpose of all kind would generally go regarded as highly speculative or risky at a due time. They were selling on most attractive basis and due soon to begin with the greatest advance in history. Conversely, the very fact that advance in what they were adoptedly dangerous level as judged by past experiments later transformed them into investment, the entire stock buying public into investor. The distinction between investment and speculation in common stock has always been a useful one, and its appearance is a cause for concern. We have often said that the Wall Street as an institution would be well advised to reinstate this distinction and to emphasize it all dealing with the public. Otherwise, the stock exchange someday to be blamed for heavy, spectacularly loose losses, which those who suffered them had not been properly warned against. Ironically, once more, much of the recent financial embarrassment of the stock exchange firm seemed to have come from this inclusion of spectacular common stock in their own capital fund. We trust that the reader of this book will gain reasonably clear idea of risk that are inherent in common stock commitment, risks which are inseparable from the opportunity profit they offer, and both of which must be allowed for the investor calculation. Now, we've just said that indicate that they may no longer be what we have just said indicated there would be no longer be such a thing with just some pure investment policy comparison representative common stock in the sense that no one can always wait to buy them at price that involve no risk or market or quotational loss large enough to be disquieting. In most periods, the investor must recognize the existence of a spectacular factor and within minor limit to be repaired and to be prepared as financially and psychologically for various results that may be of short or long duration. Two paragraph would be added about stock speculation per se percent, I don't know, as distinguished from the spectacularly component narration. course, should the investor follow under present contradiction that if we have no strong reason to predict either significant upward or significant downward movement for some time in the future. First, let us point that if there is no serious adverse change, the defensive investor would be able to count on the course on the current 3.5% dividend return on stock, and also an average annual appreciation on cost-rating amount annually about on the structurally profit before tax based at the combined some this expectation or much less favorable for stock against bond than they were in our 1964 analysis. That conclusion follow evidently from the basic fact that the bond yield have gone up much more than stock yield since 1964. We must never lose sight of the fact that the interest and principal payment on good bond are much better protected and therefore more certain than the dividends and price appreciation on stock. Consequently, we are forced to conclusion that now, toward the end of 1971, bond investment is clearly preferable to stock investment. If we could be sure that this conclusion is alright, we have to advise the defensive investor to put all his money in bond and none in common stock until the current yield relationship changes significantly in favor of stock. But of course, we cannot be certain that the bond will work out better than stock from today's levels. The reader will immediately think of inflation factor as a potent reason on the other side. In the next chapter, we shall argue that our considerable experiments with inflation in the United States during this century would not support the choice of a stock against a bond at present differently in the yield, but there's always a possibility that we consider them remote of an oscillation inflammation, which in one or another would have made stock quantities preferable to bond payable in a fixed amount of dollars. There is alternative possibility, which we also consider highly unlikely, that our American business will become so profitable without step-sale inflation as to justify a large increase in common stock value in the next few years. Finally, there's a more familiar possibility that we shall witness another great speculative rise in the stock market with a real justification of the underlying values. Any of these reasons, and perhaps other we haven't thought of, might cause investors to regret a 100% consideration on bond, even at their more favorable yield level. Hence, after this foreshortened discussion, I think we should read it from here because my family, there's a problem between them. Not a problem between them, but my grandma's coming now, so I can't continue. So thank you for coming and have a good day.